Well, if you think petrol's getting more expensive, you could be in for an even bigger shock. There's a warning today that prices are set to rocket with global oil production continuing to fall. So how worried should we be, and how quickly do we need to wean ourselves off fossil fuels? For more on this, we're joined by Dr. Michelle Zybots from the University of Technology in Sydney. Michelle, good morning. Welcome to the program. With the oil production industry at the moment, there seems to be an amazing tightening, yet we are led to believe there are still reasonable stocks available. What is the difficulty of getting oil to major industrial markets?
Well, put simply, the problem at the moment is that we just can't pump enough of the stuff out of the ground quickly enough to keep up with demand. And there are basically two aspects to this. The first problem that we've got is that economic growth and development in China and India is taking off at a rapid rate, and so keeping up with the oil demand, the demand for oil in those two countries is really tough. The second factor, and I guess this is the crunch point, this is what we really need to take notice of, is that we've used up all of the really easy to access oil reserves throughout the world. So all the reserves that were easy to get at, that were cheap to mine, we've basically used up most of those. So we're now into the second half of global oil reserves, and basically those reserves are much more expensive to access, they're more difficult to find. It's not so easy to increase production of those. It's a lot slower. And so when we get a bit of a spike in demand for oil, we're not able to just crank out the oil as quickly as we used to. So that interplay of factors is the reason why we're now seeing this slow creep or increase in the global price of oil.
Well, oil at the moment is well over $80, and they're saying if it gets to $100 a barrel, it could cripple the American economy. What is the overall effect likely to be on the world's economic situation?
Well, the problem is that the world generally is a lot of people say that we're addicted to cheap oil and cheap energy that's fast to get, and a lot of our systems, our infrastructures are set up so that we can use that type of energy quickly and cheaply. So when our systems begin to recover from recession, which is what the US is trying to do now, the demand for oil goes up, but if the supply is now more difficult and it's more costly and it's more expensive, then as soon as we start to recover, we then push the price of oil up, and that then pushes us back into recession. So we're now entering a period in global economic history which is very different to anything we've experienced before. And I think basically what the message is that we do have to think very seriously about changing what we do. And in Australia, most of our oil is spent on transport. So transport is a big area where we now have to do things very differently.
Well, we already have about 40% of our domestic production is imported, and that's likely to rise to 60% in the not too distant future. What will that do to petrol prices at the bowser here?
Well, once again, it means that we're more dependent on imports, and so we're more vulnerable to these global fluctuations that we mentioned earlier. Basically, the other problem is it's not just petrol prices, but it's also interest rates and therefore mortgages. So mortgage rates. So if the price of petrol goes up domestically because international oil prices have gone up, and that's then happening in combination with pressure on people's mortgages, then there are a lot of people that are going to be in quite a bit of trouble. And so this is why we really do need to start looking at alternatives that inoculate us, if you like, against this dependence on what is becoming a very volatile global oil market.
Yes, it's dire times out there, isn't it? Michelle, thank you very much. Michelle Zybots there from the University of Technology in Sydney. Thank you.